Welcome, welcome, welcome to the final day of our final edition for 2023, our live trader showcase. This is a quarterly event. This is Sherry, of course, your hostess, and this is a quarterly event where we feature expert traders to bring you trainings, tips, hints, and insights from many speakers. This time we happen to have 20 prize giveaways. Please check out tradersexclusive.com where we put up our posts and our articles and video clips that have nuggets, golden nuggets for you to learn new trading tips and techniques. Before I get started, I do have to do the disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance, of course, is not necessarily indicative of future results. This is our lineup for today. Michael, Daniel, Kenny, AJ, Michael again, Harry Boxer. Then if you need to reach me, it's support@tradersexclusive.com. And I want to thank our December sponsors. We have blue chip sponsors, Market Taker Mentoring, Hit and Run Candlesticks, and Vantage Point Software, Vantage Point AI, and also Mumu. Kenny, the Warlock Glick of Hit the Bid on. He's going to talk about VWAP, and I don't think I've met a single person who's more enthusiastic about VWAP. And I want to just tell you that Kenny's been trading since 1994, and he's had some exhilarating highs and plenty of soul-crushing lows. Through it all, he is still alive and kicking today. Most of his success came in predicting the downfall of the market in 2000 and again in 2008, as his mom raised him to be quite the pessimist. Now he spends a good portion of the day teaching new traders about all the pitfalls and nonsense that goes on during the trading day. Kenny uses all the awfulness he has witnessed to instill some good rules to live by for the new trader. He helps people get through the learning curve, aka losing money, and trading so they don't get themselves into a hole right from the start. Watch some of his videos and you will know he likes to have a good time with trading. He's learned that the less serious you are, the easier it is to deal with the stress involved in this business. And I just gotta say, for a person who is innately pessimistic, you don't strike me as pessimistic at all.
All right, we're ready to rock. I usually just rip for 45 minutes without even letting anybody get a question in. But
Okay.
I'm an active trader, my friends. So I have been rip roaring. I do a live broadcast every day since 2012. I never stop talking. Hey, hang on a second. Let me just. I'm actually doing a simulcast as we speak right now. Let me make sure I could do this without blowing everybody up. All right, checkity check. Hopefully you guys can hear me over there in Sri Lanka. So yeah, more or less what I do. And again, the way I run my business is the way I run my life. I'm just right in your face. Some people think I'm kind of curt, almost borderline condescending. My nickname is the Warlock. When it's time to trade, I have a persona on. I think of myself as a gladiator in the arena, looking to smoke or smite my victims. This is a battlefield. And for 30 years, I've been trying to, find the best weapon to use. And the weapon of choice right now is volume weighted average price. And I spend my life now, and again, I do tend to insult people with this next comment. I'm not a fan of this industry, okay? Because I was an awful stockbroker when I first got started. I saw how the sausage was made. I was with the Wolf of Wall Street. I was with those terrible penny stock firms. And I just got rubbed the wrong way right away. And then with when the beginning of trading started, when SOES, if you guys remember, small order execution system, the SOES bandits, Harvey Houken, I was trained how to start looking at the markets and then learn how market makers think. And once I started hanging out with market makers, my God, these people are awful. They're just out there to manipulate, take your money, steal your money in a way. And all the cliches about this industry are real, okay? They are true. This market wants you to lose money. It's trying to take your money. And now our friend who was talking about algorithms, he's got it right. The only way you're going to fight this machine is to be the machine. And the only way I found to be the machine is you trade price. And that's what the stock is doing at the current time that you're watching it. And the most important thing that I've seen is that volume weighted average price, VWAP for short, is the indicator that the algorithms are using, the quant firms are building their, you know, their programs on how they acquire stock, and automated trading is using VWAP. And of course, volume weighted average price is one of the most influential numbers of the day. So to go back to, you know, the early 90s, all I knew from VWAP was it was a number on a chart. You know, for instance, if you see my chart right now, we've been trading DocuSign all day. We're still long the trade right now, as a matter of fact. What you're looking at is at 47.50. And I never understood, okay, there's one price on the chart. The idea behind VWAP is there's an institutional trader out there, not farts in the wind like me buying 600 shares and 30 contracts. I'm a nobody. You know, we're just trying, we're like the little guy underneath the shark picking up the scraps, but the scraps are enough to make a living on, okay? So what we want to know is where the institutional money, the guys that are buying millions of shares, moving the stock, what are they doing? And that's what VWAP is. So if you see a stock that's hovering below the VWAP, you could think of the quant, or the, let's say, the human being, to you know, just assume that the machines aren't doing all the work. They're looking at the stock below the VWAP and they're saying, oh great, I need to beat the VWAP. So let's say Sherry works for Glick Incorporated, and I say, all right, Sherry, I need 1 million shares of DocuSign in our fund by the end of the day. So when Sherry's sitting there buying, you know, 10,000 shares here, 10,000 shares there, and it's underneath the VWAP, she's doing a great job. So when the stock starts to get back above the VWAP, she has to frantically start buying because her end of the day price has to beat 47.58, or we scold Sherry and she doesn't get a bonus and the Christmas will be ruined and she won't get the, you know, the G.I. Joe with the Kung Fu grip, if you know some Eddie Murphy. So the idea behind VWAP is if you find a stock that's below the VWAP and then breaks back above it, think about the institutional trader chasing their own trade. So what we do is we just look for those moments. And what I have found over the last decade now, and let me explain to you why it's been a decade, I really thought I knew what I was doing. You know, back in 97, 98, I went from being a stockbroker to becoming a SOES trader, and I had immediate success. Usually you don't have immediate success. I just learned how to read the tape. I learned how to, you know, follow Goldman Sachs and Merrill Lynch, and I just learned how to become a market maker. It was a different beast. I never even looked at charts. I just cared about price and what the stock was doing. So I was always a price-minded trader. Then I got a little bit too cocky. You know, as a bear, you know, I did really, really well when the market crashed in 99 because I never saw stocks doing what they were doing at the time. And I was shorting everything, just waiting for the crash, and I was getting my ass kicked for, you know, quite some time. And then it rolled over, and I did very, very well. Then, you know, let's talk about, you know, 2008, 2009. On the way to 2008, 2009, I was having a tough time because I'm a perma bear. I don't, you know, I don't like owning stocks. I don't really have a portfolio. I'm more of a trader. So I'm always looking for stocks to go down. And I kind of don't like bull markets because that's when everybody makes money, and it kind of takes away a little bit from the skill set that we possess. Everyone's a genius in a bull market. You buy the cues, yay, look at me, I'm a genius. Most stocks are going up in a bull market. And the funny thing is about that whole comment that I just said, most stocks don't go up in a bull market. Most good stocks. And you know, you hear about the Magnificent Seven. If you do some research over the last 10 years, 20 years, 50 years, and 100 years, most stocks really do stink. Most are pump and dumps. They have no business model, and they eventually go to zero. The majority of the market is not that good. That's not why we're here. We're here to talk about algorithmic trading and how to profit on a daily basis. I've gone back to my roots. I am a trader, and I'm a day trader. You know, some people have that a bad connotation. You know, we were shown in a bad light. And if you Google me, I was, you know, the poster child for day trading. I was on 20/20, 60 minutes, 48 hours, and they looped me in with a bunch of gambling maniacs. One guy's at a dog track, the other woman's addicted to playing, you know, poker, and there's Kenny Glick, the day trader. And that was the group that people that they lopped us in with. And I would try to defend day trading, saying, since when isn't the market gambling? I'm just doing it on a very, very short period of time where I have a better advantage. I can probably tell you where a stock's going to be over the next 2 hours than where it's going to be over the next 2 months or 2 years. 2 years? I can't even tell you where a stock's going to be 3 days from now, especially over a weekend. So I stopped trying because this trade that I do, it works. And for the last 10 years, right? let's say there was 9,000 of these opportunities, 8,900 of them have worked. And that's not saying that I was in every one of these trades and I made money on every one of these trades. That's what I do now for a living. I show people how well this trade works, and I create the fisherman that you need to be, the hunter, the stalker. And I show you where to look every morning. And more importantly, I do it for nothing. The way I run it, and my dad, taught me this, he's like, listen, if you are so good at what you do, why not show me what you're all about? And then if it's really something special, I'll buy it. And I was like, you know what? That's the business model I'm going to go with, because I used to subscribe to chat rooms. I used to subscribe to newsletters. If they were good, I stuck with them. If they weren't, I asked for my money back, And, one of the newsletters, my dad still, it's been 30 years, Stephen Lieb. Let's give a shout out to Stephen Lieb. The guy's doing a great job. We've been reading him for 30 years now. So I took that idea and I said, you know what? I'm pretty good at what I do. Why don't I just let people into my chat room? And by the way, if you want to even start right now, my name is Kenny Glick, and you can get a laugh out of this. Kenny Glick at AOL.com is still my email address. You send me an email, I'll send you a password by the end of the day, and you could come into my chat room. Because what I'm about to tell you sounds like I'm full of shit. Because today we have no losing trades. This week we've had 2 losing trades out of about 150 trades. That sounds ridiculous. That sounds absolutely insane. That sounds like it cannot be true. But if my friends are in the chat room right now, can I get a couple of hallelujahs? Can I get a hallelujah from what we did today, from what we did yesterday? Because this trade works, my friend. So let me show you what it's all about. So
Give me
what
that
we
email
do
again,
for
one
a
more
living
time.
is we are reversionary VWAP traders around earnings reports. What the hell does that mean? Well, I'll explain. If a stock reported earnings, it's either going to be gapped up or it's going to be gapped down from the prior day, right? So the numbers come out. Oh my God, they were great. And the stock rips higher. Oh my God, those were terrible. The stock starts to tank. The next day, people are going to make new decisions based on that information. But more importantly, the computers will make the main decision for you. So when we come in, we have a default. So today was DocuSign. Whether you like the company or not, let's take a look at the long-term chart. If you're a long-term holder of this, you hate this stock. You were duped. You were fooled. Wow. It was a company that you could sign documents on the internet. Genius. Fantastic. Hey, if you liked it at 314, you must love it down here at 38. That's not the problem. See, these are the charts that I love. When stocks get absolutely hammered, that's when my bearishness, the bears have won. Now I could become bullish down here. I'm not a bear all the time. People shorting Carvana at $5 or $6, 8 months ago are absolutely insane. Shorting stocks after they've plummeted 90%, not a good setup. So what we look for is the short-term reason to get involved. So the numbers were good or they were bad. It doesn't matter. So here's the reaction from yesterday. Numbers come out. Oh my freaking God. Wham. This stock rips from 47.50 to 52.18. And then suddenly, apparently, they must have said something a little bit detrimental or something awful in the next meeting. They had the forward guidance or whatever. Bang. Stock gets lit up from 52 down to 45 and change. We take all this into consideration because the computers take it all into consideration. And the only way to make money in this market is to be the machine. You want to beat the machine, you got to be the Terminator. You want to try to fight Skynet, you got to be the Terminator. You want to beat the Matrix, you got to be Neo and the Oracle and Morpheus and all those guys rolled up into one. And how do you do it? Price. You play the price right back into the machine's face. And how do you do it? VWAP and price. So what we do is we take a look at what we do. And listen, this is active trading. What you're witnessing, what I'm about to do for you is what we do every single day. And like I said, you just send me an email right now. I do not sell anything except myself. Okay? We don't have scanners, whistles, doodads. I don't do any of that stuff. I teach people how to trade around VWAP and about price. And I let everybody in my chat room for at least 2 or 3 weeks. I'm giving away the whole rest of the month for nothing. And if you do win the prize, you're going to get 2 months on me because I'm bent on showing people how to finally outsmart this market. Because the bottom line is you don't have to outsmart it. You just got to join in when the best time is to join in. And that's what VWAP's all about. So we take a look at the price. You see that little double bottom right there? Bang. Zoom in on those prices right there. You see the price? It's 45.50. You see this price? 45.50. Half numbers and whole numbers. For the last 150 years, or however long you've been watching the market, stocks tend to go from halves and wholes. Before we had decimalization, we had fractions. You had eighths, quarters, 3/8, half, 5/8, 7/8, and the whole number. Nobody was calling their broker talking about, yeah, I want to buy some Qs at 3.90 and 3/8. Nah, you'd give a whole number, a half number. And since that, even though we're in decimalization right now, the market tends to follow half numbers and whole numbers. We know that, and we see it, we witness it, and we take note of it. So you had a little double bottom there at 45.50. Look how the stock bounced from the 45.50 to the blue line. The blue line was yesterday's VWAP. So we take that into consideration and we see what the stock did the prior day, and we plot those ranges. And then we wake up in the next day and we say, oh, look at DocuSign. It's even going below the 45.50. That's a reason to short it. So even though we came in with the default that we're going to buy this stock, the first trade we did was we just follow the money. If this stock wants to break the prior lows from the aftermarket, there must be some real sellers out there. They don't even want to buy this dip, and it gets slammed from 45.50 down to 44.34. And then we call this the jiggle. Pop, 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 pop. 1 minute, 2 minute, 3 minute, 4 minute, 5 minutes, 6 minutes, 7 minutes. So at this point, you're thinking, oh my God, this stock's going to zero. And then here comes the turn. And the better trader you become, you realize that it's not what you think or how you feel or whatever you just read about an analyst or who owns this stock or what your cousin thinks. Once the stock turns, not only do you not want to be short anymore, this is now the setup that we dream about. This is the 1 minute. The orange line is what we call the prior day VWAP, or in this case, the multi-day or prior day. We have our algo, if you will, to give us the data on our computers right there. I just want to show you a couple more data points. That's 2 days worth of VWAP. The blue line won't change because that's today's VWAP. I have a program where I could just go give me 3 days worth of data. It could give me 4 days worth of data, as many data points as I want just from the click of a button. And I give you my chart, I give you my layout, I give you my setup when you join our website. So let's go back to the 1 minute and the 1 day. This is the trade that I've been saying how it works almost 97% of the time over the last decade. And here it is again. And what's wild about this is that we were short first. We're actively trading the stock. So if the stock wants to tell us, hey, there's some sellers out there and you're breaking the pre-market lows, I'm shorting, and we got a little payday out of it. But we know that if it's going to break back over the VWAP, not only can you not be short, this is your wake-up call. You got to cover and go long. Welcome to professional trading. That's what we do. I don't want to call myself professional, pseudo-professional. I'm a pseudo-professional trader because by 11:30, I'm out the door just doing something, singing and dancing or whatever I can do to avoid churning my account. But right here, this one line is basically all you need. This line right here is icing on the cake. So what is a trade? What do you want to know about when you put a trade on? You want to know, why am I buying it? Where do I think it's going? And if I'm wrong, where am I going to get out? And that's it. Stock could either go up, down, or sideways. So why am I buying it? Well, it's breaking the VWAP. Let me get rid of these red lines because I'm going to show you how I did it. All right. And if you just ask yourself, can I do this with options? You certainly can do it with options. It was even better with options, and I'll show you that in a second. And I could spend probably 3.5 hours explaining every in and out that we did on DocuSign today, where we put our stops, where we raised our stops, because that's trading. And if you could conquer one chart, you could conquer the world. So here we are. We're shorting the stock, and next thing you know, we're seeing that it tries to rally. We're not getting spooked because it's still below the blue line. It starts to roll over, but doesn't break a new low. So now that new low is very significant, and this little pivot point is pretty significant too, because that's where it tried to go down and it didn't. Here is where we have to make a decision. We're feeling pretty lovely about that short, and now we're saying, oh my God, we got to get out. And in this moment right there, this separates the good trader from the bad trader. The bad trader is saying, oh man, those numbers were terrible. This stock's going down. Oh, now it's going back up. Ah, that's bullshit. It'll roll over any second. No, it won't roll over any second. It's time for you to cover and get long. Join the winning side. The stock is telling you it wants to go up because it's breaking the VWAP. And if you just said to yourself, well, what if it didn't go up after it broke the VWAP? That's a great question, voice in my head. I would sell it. So you see where it broke the VWAP and then it kind of had this one moment where it didn't do anything? Your stop's down here and here. So these little moments, we call them jiggling or shuffling, mean nothing to us. It's just waiting. It's gathering its steam. It's having that, we call it sometimes the Popeye moment. The VWAP, it's the spinach. It's gathering its spinach. It's gathering its strength. It's eating its spinach. And then off she goes. Now, back when I was a kid, when I was trading when I was 20, I used to buy stocks if they broke the 930 high. Wham, look what it's doing. It's breaking the 930 high. The reason this trade works so well and why it's so special to my heart is that I used to be a guy that would buy the stock here. VWAP's getting me in down here. So I'm already profitable. The option's already up 40% right here. And I'll show you those options in a second. But what is trading? Why am I buying it? Where am I selling it if I'm wrong? And where do I think it's going to go? 9 times out of 10, when we have a stock that reports earnings and it breaks the blue line, it gets to the orange line 90% of the time. It's absolutely absurd how well it works. And bang, you see it. Now look how it got there. Now again, the orange line, it's a living, breathing indicator. It's moving. You'll have to take my word for it. You see how it hit 46.74 and the VWAP was 46.86 earlier? The VWAP was 46.80. It came 3 cents away from a perfect trade. So we start selling it up here and then it starts to pull back. So now we're not going to let the stock all the way go back down there. Now we raise our stop to the 930 high where it just broke out from, and we raise our stop to this little area where it broke. And now we can get rid of that line because it doesn't count anymore. We're not going to let it go down there. We're certainly not letting it go to the low of the day. Now we're already in the milking part of the trade. So we're in at a great price. We're selling some. So now you say to yourself, well, how do you know you want to stay in it? How do you know it's going to go higher? You don't. You don't know it's going to get higher. And if somebody tells you that they do know it's going to get higher, they're lying. You don't know anything. You just trade what you see. So when you start selling the stock, now you raise your stop. You've heard of trailing stops? Basically what this is all about. You take the pivot points from where the stock pulls back to, and that is your new stop. So you're selling into the move. Yeah, that was a great trade. I hope it goes higher. I hope it goes higher too. There's my stop, and maybe I want to be a little bit more conservative. I raise it up. But now that we're breaking through the prior day VWAP, what we have found over the last 10 years of watching this trade set up, that not only does it work 90% of the time to get there, if you break over the multi-day, and this one's going to get you, 98% of the time, the stock goes higher. So if you have an earnings report that's below the VWAP and it breaks the VWAP, and then it breaks through the prior day VWAP, in this case, the day before VWAP, almost 100% of the time, which sounds absurd, almost 98% of the time, close to 100% of the time this year, we've had a follow-through trade. Now, a follow-through trade, what does that mean? It means it followed through and you were able to make more money. Sometimes it goes up a little bit and then it rolls over and dies. Sometimes it goes up a lot, then it rolls over and dies. We're actively trading the name, and that's why we're still in it. So we take profits along the way, and then we raise our stops. Now, again, as it's hitting new highs right now, look at me. We're in the stock still. So why are we still in this trade? Let me show you. So as we get through that prior day VWAP, now we're not letting it go back here anymore. Bang, remove that. We're not letting it go back there anymore. You're out of your mind. We're not even letting it go back here. We have a winning trade. You're not going to allow this trade to become a loss. You're going to try to make as much money as you possibly can in this one trade. And how do you do that? One key phrase: don't sell your entire position at one price, ever. When I was taught how to trade, my mentor, his name was Isaac, and he would sit there and watch me trade. He's like, why'd you just dump the whole position at that one price? That's pretty arrogant. I'm like, I don't know, I just made $1,500 on that trade. He's like, yeah, but why would you sell it all at one price? Is that the best price that you're going to get for the rest of the day? Who are you to think that? I didn't understand why he called me arrogant at the point. He's like, yeah, you're being arrogant about your trade if you think that price right here at 47.25 is going to be the high of the day, guaranteed. Just sell some there, raise your stop, and let this thing work for you. Oh, okay. That sounds like a good plan. And ever since he told me that, that's what I've been doing. So you sell into the move, and now with you got these prior day VWAPs, you've sold some at the 1 day, and that was at 46.90. Now take a look at 2 days worth. 2 days gives you 47.36. Yippee. So now the computers are doing all the work for you. Let the machine work for you, right? So you've sold some at the 1 day. You got to the 2 day. Let's say you got your 600 shares left. You sell 100 shares there. Now you got 5. And you take a glance over and you say, hey, the 3 days up a little bit further. All right, cool. Maybe it gets there. How about 4 days worth of VWAP? Nothing. How about 5 days worth of VWAP? Not much. So now you go back to the idea that this stock rallied all the way to 52.18. Kenny, are you thinking this thing's going to 52.18? I sure am. It was there last night. Why can't it go back there today? That's why you don't sell your entire position at one price. So as we're working this trade, as it keeps hitting new highs, why would you sell it? It's hitting new highs as we're sitting here, as a matter of fact. So why would you sell it? You wouldn't. But when it starts to consolidate, these consolidation prices are now your new stops. See where it broke out from? It tested it there. It kind of flirted with it here. It flirted with it there. That's your only stop now. So you say to yourself, you know what? Maybe this thing is going to 52.50. I'm not selling any more of it, but at 49.50, you're in an amazing trade from $45. Sure, you're selling a little bit up there, but for God's sakes, do not sell it all. And that's what we do every day. What you're witnessing right now is what we do every day. I tell you what stocks to be looking at. I tell you what we think it's going to happen. I give you my charts, and we go through this stuff every day. And then we're more or less like the Roman Empire. I'm the emperor. We got a couple of senators in my room, Senator Sleon, Senator Solid, Senator Fatty, and we all just gather ourselves every morning, and we come in with purpose, determination, with focus, with discipline. All those cliches about trading are all rolled up into VWAP and price, because price gives you the discipline. Price takes the fear out of the equation. You're not afraid. Is anybody afraid that you're in DocuSign? Oh, what if it starts going down? Oh my God, I'm afraid. What are you afraid about? You have a stop on. If it starts to tank in the middle of the day, guess what? You'll sell out of it. Boom. Fear's over. There's nothing to be afraid of when you focus on price. So every day, not only am I your guru of VWAP, I'm also your life coach. Okay? Because if you're sitting there gripped with fear as you're trading, there is no way you're going to make money as a trader. But when you start to trade price and you understand the mechanics of the market, you realize fear is the other guy's problem. There's no fear in this dojo. You could trade futures with this also. You could trade anything. So let me show you the options. So for my players that can't afford to buy 1,000 shares of a $44 stock, and again, I should have started with that. I bought 1,000 shares, or I think I started with 600 at this time. But let's say again, typical day trader, we got $30,000 in an account, we got 4 times buying power, we got about 120 grand to play with every day. Guy in the back just said, I don't got that kind of money. What the hell are you talking about? Who is this guy? I'm talking to you now. How about options? You got a couple of $100 to work with? Let me show you how you put that to use. So the same idea, and I'm going to blow your mind right now with the simplest thing to remember. What I've learned about trading is KISS. Keep it simple, stupid. You've heard that saying? It's the same thing in the world of trading. Keep it as simple as possible. If you're a day trader and you want to trade options and you're buying this stock and you see it starts breaking VWAP at $45.25, right? Are you going out? Are you buying the March 2024 47.50s? Of course not. You have no intentions of holding this thing till March. You want to make money now. You're going out there and you're buying the December, 2 months out. You're buying the 45s for 2 months out. Of course not. You're going to go at the money as close to expiration as possible, because that's where you're getting the cheapest option that is available. So we trade, again, with every trade that we put on, you never have to ask me which contract I'm buying. If you're day trading, you're trading the at the money call as closest to expiration. Now, I want to add a caveat there, or another part of this equation. When you're buying the $45 call and you think this stock's about to go to $47.50, ever heard the word lotto play? That's the gamble. But if you're going to gamble on something, at least gamble on something that works this well. So before we go into the lotto play, let me show you what you can do on Thinkorswim, and I love this feature. You can plot the option, and this is part of it, right? This is part of it. The reason that you use in the money weekly options is that it's going to trade lockstep or 1-for-1 with the stock, because the option has no time value left. It has no volatility left. The stock has now, the option is trading as if it is the stock for 1/10 of the price. So instead of having to lay out $45,000 for 1,000 shares, you're buying 10 contracts right there. You see how it's jiggling around? You're buying 10 contracts for the low, low price of $77. So for 77 cents, I meant to say, 10 contracts cost you what? I'll do the math for you because I promised no math on the quiz. 10 contracts at 77 cents cost you $770. So the trader who has the 45,000, I like trading the stock because I'm a little bit more nimble with it. But if you only have the smaller account, you could take these same trades and use it with options, and you've done much better than I have, because you laid out $770, and now your trade would be worth $4,700. Let that one sink in right there. That's a 70-cent option going up to $4.70. Now again, did we buy it at 70 and still in it at 470? Of course not. That's the internet. The internet always buys at the low and sells at the high. Nobody does. And if they say they did, they didn't. They're lying. What we're doing, we're buying it at 77 cents, and it got to $1.28. We're selling 3 contracts right there. Yeah, it's almost 100% on your money in 4 minutes. You're not going to take the money? Of course you are. And then it starts to go higher. And then it gets to $2. You know what we're doing there? We're selling a couple of contracts. Now we're down to 5 contracts. And then it starts to rip. And at $3, what do you think I'm doing there? Selling a contract. Boom. Now I'm down to 4 contracts. By the time this is 470, we're down to 1 contract. But you laid out only $770, and you're up close to $3,000. And again, that's only 10 contracts. We've got a room that starts his positions with hundreds, 100 lot. Think about that for a second. He put up $7,700. And just on this one trade, let's say he fell into a coma and just woke up, he'd be up close to $50,000 on a $7,700 investment. And that's in one day. And this, my friends, is why I do not invest in the market. I find these trades every single day for the last decade. I trade volume weighted average price earnings reversals for a living. And I've never seen anything work like this ever in my entire life. Let me show you something even more special. So I bought the in the money calls. You buy the in the money calls. Now, why do you buy the in the money calls? Because what if the stock only went up $2 and you bought the 47 or the 48? Those aren't really going to budge too much, because you can't anticipate the stock. Let me just put the stock on the screen here for you. You can't anticipate a 5% move, a 2-point move. You could hope, but you have to be conservative. That's why you go in the money. But once you start witnessing how well these trades work, why not get the in the money call and then what we call the lotto play, where we think it could go? So when we started looking at that chart, let's go back to the main chart. And I said I could probably spend 3 hours on one chart, because that's how you learn how to trade, my friends. And we think, okay, stock was 52.18 in the aftermarket yesterday. It's all the way down to 44. Is it really going to go to 52? I don't know. Could, but maybe it goes to 49 or 48. You don't want to buy the lotto play at the end of the day when you're running out of time. You put that trade on right at the beginning of the day, because that's when they're dirt cheap. That's when no one's thinking they're going to 50, 49, or 50. So watch this. Imagine for a second you said, all right, I'm gonna buy the 45s because that's what Kenny says is the proper procedure, but I feel like gambling. Maybe this bad boy does rip to 52. I'm gonna throw a 47 out there. Maybe in a 47.50. Let's take a look at those 47.50s. How you doing? You could have been picking up those 47.50s. You know, again, you weren't buying the low of the day. Nobody was buying the low. Maybe you felt like gambling. But even if you chased a little bit, and I'm not even calling it a chase. You're buying them here at 11 cents. Look where the multi-day was. That's $1.35, Holmes. So that's an $1,100 trade turning into $13,000. $1,100 on 100 contracts at 11 cents. Your first area that you were probably going to sell was 132. Now, again, I know my buddy, he sold some at 50, he sold some at $1 because I've taught him well. And he's still in this trade. And he's in from 12 cents. And he has 100 contracts. Think about the money there. This is a $1,200 trade turning into $25,000 just on the simplest setup on a trade that works almost every time it shows up. This is what we do, and I will not do anything. You could have a CEO of a company call me and say, hey, we're going to have a blowout quarter, Kenny. You should load up on options tonight because we're going to have a massive report tomorrow. I'll tell them, no thanks. You know why? Because buying options before an earnings report comes out is a losing game. Pause for dramatic effect. It's a losing game. Because if you're buying an option the night before the earnings come out, they're priced 20 to 30% more expensive than they normally would be because the option market makers don't want to be caught on the wrong side and they have to price in what may happen. But the next day, we're trading those same contracts like somebody bought them last night at 227. We're buying them at 11 cents. And then they go back. The stock had to have a 5-point move just for that guy who bought them last night to break even. And we're in down here. So what I do for a living is I trade this setup, and this is all I do now. Anything else that I do, I want to gamble on some Rambus. I don't know if you guys know about this, and I'll talk my book for a second while I got your attention. I own this stock. This is NVIDIA, and Micron Technology all rolled up into one name. I've been following it for 25 years. I did very, very well for me and my dad did very well with this stock back in 1999 and 2000, and then it basically went into a coma for 15 years, did nothing. You see this dotted orange line? That's what we call lifetime VWAP. Where do you think I bought the stock back 15 years later? Coming out of this range at around $18, $19. It went into the 30s. I sold it. And now I want to show you something absolutely insane. And again, this is not me pitching you the stock. I don't care if you buy it or don't buy it. I just want to show you some of the other stuff that I do. This is let me get it. Time frame, max available on a monthly. That's a weekly. Let me give you the monthly. I don't know why I'm even doing this, but I like showing this chart because it's hilarious. There. This is the life of the stock from 1997 to today. When you see a stock coming out of a slumber like this, it's pissed off. It's angry. It wants to go. And it's ripping. So if you've missed NVIDIA and you've missed Micron Technology, you've missed some chip stocks in the greatest bull market ever created by this government, and you know the government controls the stock market, right? Anyway, this stock looks like it's ready to rip. And even though I like what the company does, even though I'm pretty familiar with it, I still only trade price. So right now that I'm in it, those breakout levels, I'll show you on a short-term basis, and this is why VWAP is so special. You could put it at whatever time frame that you deem worthy. And I show you which time frames are deemed worthy. Right now, the 3-year VWAP is where it came out of. We're using the 3-year VWAP as our out. But let me go back on a daily basis. Let me just stay focused with you for a second. And my friend who wants to trade futures, watch this. So here's the NQ futures. This is the QQQ. I trade it every day. And you just, I kind of ruined the surprise for you. You see the dotted orange line? That's prior day VWAP. You guys, you understand we're in a bull market, right? And the bull market, nothing goes straight up. The market tries to get you out. Like I was saying when we first started the presentation, the market wants you to lose money. Think of you, like I said, go back to being a gladiator. They're trying to get you. They're trying to take your land. They're trying to smite you. We're not going to be smote. What's the past tense of smite? Smite, smitten, smote, smoked, whatever. It's trying to shake you out. But if you use VWAP back at the machine, you cannot be fooled. It doesn't mean you're not going to lose money, Because let's say it would have broke the orange line right there. You would have had to say, okay, this ain't happening. We better get the hell out. That's the power of the VWAP. It tells you whether you're right or wrong. And if you ignore it, you're a loser. Not you personally a loser, but you will lose on the trade. Don't ever ignore the VWAP. So we understand that the VWAP is our shining beacon of hope to make money in this market. And just for a second, I want you just to ease your mind and sit back in your chair for a second and breathe it in. Breathe in the VWAP and breathe out the fear. Breathe in the VWAP and breathe out the manipulation. One more time. Breathe in the VWAP and breathe out the CNBC. You all just became 2% better traders right there in that moment alone. So the VWAP not only will provide you where to get in, where to get out, it'll tell you if you're wrong. So my futures trader, if you were looking for a reason to buy the pullback, how about when it pulls back and holds the prior day VWAP? Because with every trade, like I said, you have to identify risk. Why am I getting in? Where do I think it's going? And what am I going to do when I'm wrong? So let's say you saw, oh, okay, the NQ futures just got slammed. All right, all they did was pull back. They never broke prior day VWAP. You could start buying on this move up. My friend asked me that. He's like, so do we buy at prior day VWAP? You can. And what we do is going back to the same trades, right? If you're buying at, you see it holds that, and you start buying here, where do you think your stop's going to be? The orange line, the prior day VWAP. And then if you want to scatter your stops, because remember, Isaac, don't get out of your entire position at one price. You look for other prior pivots. So if you're buying in here, and let's say you just wanted to buy the VWAP break, because again, it does tend to work. You saw it pull back the prior day VWAP, you're buying it back over the 1 minute. Where's you going to sell it? You sell it at prices from where it came before. You're just working the machine back in the machine's face. The dotted yellow line is prior day VWAP, or we call it multiple time frame VWAP. And if you follow Brian Shannon, one of my heroes, he anchors it to specific days that he thinks deemed worthy. I use it as prior day and multiple time frames. So I use it on daily basis. The blue line's always the 1 minute. That's the one that forms today. And dotted orange line will be prior day, or however many days I deem I want to go take a look at what the stock's been doing. But when I see it pull back to the prior day and hold, that gives me the added confidence that I'm like, okay, the bears are going to lose this battle. I'm getting back in, and then you could start making money. So I only have 14 minutes left. Again, Kenny Glick at AOL.com. You can come join us. Me and my buddy, our crew. We got 300 people still trading at the end of the day. We love Fridays because that's one of our favorite days because you're trading very, very cheap options. We tend to stay here till the end of the day. Most of the time I'm done by 11:30. I tend to take a nap. I'm 52 years old right now. I'm talking my head off. So sometimes I just pass out. By the way, DocuSign new highs, still in it. Where do you think it's going? I think it's going to 50 at least. You know what we're going to do at 50? We're going to sell some at 50. If you still have those options, you're going to sell some up there when it gets to 50. And again, like I said, if you're trading the options, the best part about Thinkorswim and the VWAP, you can trade the option on the chart. So, again, it's not as liquid because you're trading options, not the stock. So you start looking at those price pivots. So if you're in this contract, you're going to use these pivot points, these bottoms of these candles, as some of your stops. And right now, there is no reason to think this isn't going to 50. But if we're wrong, we get out. It's very simple. If you're wrong, you're out. One of the best sayings that I've learned, again, from Isaac is it's okay to be wrong. We're all going to be wrong. You just don't stay wrong. Stock starts to roll over. I have no reason to think DocuSign is going to roll over and get hammered 4 points into the close. But this is why I do this stuff live on a daily basis. If this stock starts to break down under 49 and it starts to break down under that little pivot there, and it starts to break down under here, and you're still in it, you're doing it wrong. That's where your stops are. You don't let a winning trade like this turn into a loss. You know, the lay person hears that later on, like, whoa, I bought that DocuSign, and man, that tanked 4 points later on in the day. Later on in the day, we were already out of it and killing it. And that's why a lot of times when you're in these chat rooms and you're in these services or you're listening to a guy, you gotta know what you're doing, because what people are doing and what they're trying to, and again, we're pretty good at what we do, but if you only hear part of the story, all right, they love DocuSign, they think it's going to 52, I'm going to buy it right here. That's a fifth of the story. You got to know what price it came from, where your stop's in, where you think it's going to go. You have to know what you're doing. And what we do best is show you what to do. What exactly do you do here? This is what we do. So I got 11 minutes to spend with you. If you guys want to throw some symbols out there, I just want to show you how this is not random. I don't cherry pick. If you have stocks, I could show you the 5 or 6 trades that I do, but I'd rather show it to you on, you know, something that you may not have done today. It works on everything: stocks, futures, options. I don't know about Forex, and I've never met anybody that's ever made money trading Forex, so I don't talk about Forex. But if anybody has any specific stocks they want me to look at right now while you got me, of course, I got a couple of peanuts from my website, spitting them out. Oh, oil. How about that? That's one thing I don't trade, but I'll take a look. Yeah, the CL futures. Here you go. So there's the VWAP on the CL, right? Let's go back to the beginning. Let's go to, yeah. I mean, there's a lot of setups. Yeah, there it is. So right here, when you got that fall first, again, the short, you got the 1 minute and the multi-day, every reason to be short. But then you have to understand, okay, the dip was bought. It's called the check mark, right? Everybody knows this pattern. And VWAP's telling you, I'm glad you were short there for 10 minutes. It's over. It's over, Johnny. Get out. So here, not only you have to cover your short, you're going long. Whee! And look at that. Now let's go see further into the day. I don't trade CL futures, but people in our chat room do. Again, here are a couple of new setups right here. Let's go look at it live. So right now, you have an obvious downtrend. It tried to hold the VWAP. It broke the VWAP. I would have been a shorter here using stops over here, and then target would have been down here and over here. And again, sometimes you only get a little bit out of it, and then you're forced to cover some at the VWAP. And then obviously that double top right there would be my next stop. Big fat whole number. By the way, market ripping again. DocuSign, where is DocuSign? Oh, it's not a $50 yet. All right, I saw a couple of symbols there. I don't know what TUI is, but I'll put up there. Let's see, MBI. Boom. I don't know what this is, but bam, there you go. First one I looked at in the chat room. So let's say you're looking for a reason to buy, right? All right, stock's getting hammered. First trade, it breaks the VWAP. You're a shorter at 1244. Your target is prior day VWAP. How you doing? First one you gave me, thanks. I never even heard of MBI. I thought I know like 7,000 stocks off the top of my head. I never even heard of MBI. But right there, the short worked, comes back to the prior day VWAP, holds it, tries to rally. The shorters are still in control because it can't break the VWAP, can't break the VWAP, but now it's making higher lows. Look at the massive volume at the blue line. That's the longs and the shorts collectively saying, all right, this one's not going down anymore. It's breaking the VWAP. I got to cover. And the longs are going, this thing's about to go back up because it's breaking over the VWAP. So you could have made money on the short side and then got long here at 1226 and made $1 on a $12 stock. Phenomenal. Let me see if this worked on the other one. What's T? I mean, you just put in 2 symbols that I've even heard of. TUI. TUI doesn't even exist. I think you typed in the wrong thing. All right, give me another one. So I saw Lululemon. A Lulu! Oh my freaking God. Look at this monster. By the way, I love women that wear Lululemons. Lulu. So, oh my God, I can't believe I wasn't on this one today. I'm embarrassed now. Gets smacked down in the aftermarket yesterday. You come in today, look at that little attempt to rally yesterday. That attempt to rally now is factored into the algorithm. You come in tomorrow morning, you understand that you had a double top in the aftermarket. Now you're breaking over the VWAP. You're breaking over that double top from pre-market, double top of the aftermarket, pre-market, and now you got a 1 minute multi-day VWAP reversal. I heard this trade works all the time. And here it is again. Oh my God, that's 33 points. Phenomenal, phenomenal. TUI is a Turkish, TUI, it's an airline stock. Doesn't even exist. I don't know, maybe you're giving me the wrong symbol, but yeah, I mean, TUI might be on a different exchange. Yeah, we just generally trade US based stocks. So you know, I got 6 minutes. You want to keep banging out some symbols? I'll keep showing you some charts because I love this stuff. And like I said, if you have a chance, come on to my chat room right now. We got 3 hours left of the day. We never stop. We love this stuff. All right, so Bobby's looking for NVIDIA. Let me show you NVIDIA. Same kind of setup. Even more interesting because look, you had the prior day VWAP hold. It rallied, tries to roll over back above the VWAP, back above those prior highs. You better be long some NVIDIA. And look how it tests the VWAP, holds it, test of strength, right? When you're already rallying and you come back and hold it, that's a new time to buy it because now it's defining a new trade. You can get in right here and use those prior candle lows as you're out. Remember, anytime you put a trade on, why am I buying it? Where do I think it's going? And if I'm wrong, where am I getting out? And once you realize that's all trading. Why am I buying it? Where do I think it's going? And if I'm wrong, where do I get out? Why am I buying this? Where do I think it's going? And if I'm wrong, where am I getting out? And do it in increments. Even when you're losing money, you're not supposed to sell all your entire position at one price. Because sometimes, let's say you do buy it. You buy it as it's coming out of here and it dips. And you did sell some at these prior levels. Your second stop would be right here. Sometimes you get stopped out of some, but what you got left over becomes the winning part of the trade. By the way, DocuSign, new highs. See? Perfect example. The scared trader says, oh, it's pulling back. Oh, God, it's breaking the half number. I'm going to panic. What are you panicking about? There's no panicking. Your panic zone is right here, specifically at these prices, 49 and right there at 48.81. Those are the two prices we're selling. So that's why when we trade, we take the fear out of the equation because when you trade price, there is no fear. It's either going to break this price and you're going to sell, or it's not going to break the price and you're going to hold to the target where you believe it's going. Voila. Give me some more. Give me some more symbols. I look at price only. Price, price, and only price. VWAP, prior day VWAP, and the price of the stock. So again, that is support and resistance. So if you see it right here, where are my stops? At prices where it held. It broke out from there, it pulled back and held it. Support. It broke out, it came back and held it. It broke out, it came back and held it. Those came back and held it areas are your support levels. And right now, VWAP's is telling you to be in the trade. You're not using VWAP anymore now. VWAP got you in. Now you're using classic support and levels. Well, we just call it price. It is support and resistance. Sedge, love this stock because it got slammed. I've been trading this one. I never really heard of it too. Wasn't too familiar with it till I started trading it after they had our earnings report about a couple of weeks ago. Now look at this mess. It's a mess, right? Choppa, 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 choppa all over the place. But once it resolves itself, 1 minute, multi-day rollover. So if you're shorting it, breaks the VWAP, breaks the prior day VWAP, you cover some when it gets back to the lows of the day. And now you just look at these pivots, those candles. You see where those double bottom right there meets a double top? That's a very specific area. So you can't use VWAP anymore. VWAP got you in at a great price. And now you go back to just trading price. And we show it to you. MHLD. Let's go. Man, you guys are banging out some symbols I haven't even heard of. Iron Maiden Holdings. I love Maiden. Let's see what this. Oh my God, what is this crap? garbage. And how do I know it's garbage? Because nobody cares about it. When you have barcodes and Morse code on a chart, that means nobody's trading it. Those are the ones that are easily manipulated. You probably got 5,500 shares on it. No one even knows this thing exists. This is not a day trading stock. Whether you know about what this company does or doesn't do, this is above my pay grade. I don't care what any of these stocks do except for Rambus, Palantir, and some ARM. And my new favorite stock is Path, and I'm gonna give it to you. I'm gonna show you this Path trade. This is one of ours today. So as I've been explaining for the last hour, prior day VWAP holds confirm your bullishness. So I came in, I'm buying Path every day for the last 5 days. I'm acquiring the stock. I'm accumulating it. It had a massive power gap on Friday of last week. Power gap means it's gapped up on earnings and hasn't sold off. These are called inside candles. You haven't broke out, you haven't broke down. Inside, 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 inside. The passive investors go in there, oh, man, the stock just sat around all week. I didn't make any money. The skilled trader who knows the stock has been inside the power gap candle, we're buying dips every day, and look at this dip we bought today. Pulls back, holds the prior day VWAP. We're buying it at the VWAP break, and where are my option players? Now, before I go, here's the one question I'm going to ask you. Without knowing me, you just met me. I just gave you a couple of life lessons on trading. You see the stock pulls back to 2308. It's breaking the VWAP at 2330. What option are you buying to participate in this trade? Go. I want to hear everybody say it. You like the stock. It pulls back to the 2306. Starts breaking VWAP at 2310. What are you buying? I will take two answers. Well, I'll take a couple of answers depending on how you phrase it. You're buying in the money options that expire today because that's the closest to expiration. I want you to buy the 23s or the 2350s. I went with the 2350s, and look at this. 2350s, there's the trade. Again, you don't see the flow because the options are much more illiquid than the stock. But we're buying options right here. Where was it? We're buying options. What price did we get them at? Nope, I didn't pay 30. I paid 35. That's me buying them here at 35. Sold some at 50. Sold some at 70. Top ticket for 100% profit. And I think I still have 2 or 3 contracts. I got to check my account. But every day it's the same trade. Every day it's the same setup. So trading for us becomes almost monotonous. It's mechanical. It's boring. And that's where you want to be. My name's Kenny Glick. My email is kennyglick@aol.com. Send me an email. I'll send you a password right now. Hang out with us for the rest of the year, and hopefully we can make you some money so you can afford to hang with us for the next couple of years. I'm 52 years old. I probably got a good 8 years before I run out of steam. I love this. I love helping people. I love people finally becoming the manipulators instead of being manipulated. Thank you very much.